You're not offering generous payment terms. You're running a bank. And unlike actual banks, you're not charging interest. You're not doing credit checks. And you're certainly not getting paid to wait. Net-60 isn't industry standard. It's you financing someone else's operations while your own bills come due in 30 days or less. Let's talk about what's really happening when you agree to these terms and why it's costing you more than you think. When a client asks for Net-60, here's what they're actually saying. We'd like you to fund our cash flow for 2 months while we use your product or service to generate revenue. They're not being unreasonable. They're being smart. Because if you say yes, they just got a free loan. Now here's the part most business owners miss. You're not just waiting 60 days to get paid. You're waiting 60 days after you've already spent money on labor, materials, overhead, and everything else it took to deliver that work. So if it took you 30 days to complete the project, you're actually 90 days out from the day you started incurring costs. That's a quarter of the year. In that time, your rent didn't wait. Your payroll didn't wait. Your suppliers didn't wait. But your client, they're collecting revenue, using your work, and sitting on your money. Here's the cold truth. The longer you wait to get paid, the more risk you're absorbing. And you're doing it for free. A bank would charge interest on a 60-day loan. A credit card company would charge interest on a 60-day balance. But you're expected to just smile and call it building relationships. Let's put a number on it. Say you're owed $10,000 on Net-60 terms. If you had that cash today, you could pay down a line of credit at 10% interest, invest it, or use it for another project. Over 60 days, that's roughly $164 in opportunity cost. Multiply that across every invoice, and you're losing thousands each year. And that's assuming they actually pay on time. Because here's what really happens. Net-60 becomes 75 days, then 90. Then you're chasing invoices while they've moved on to the next vendor offering the same deal. So, why do so many business owners agree to this? Because they think they have to. Because they think everyone else is doing it. Because they're afraid that if they push back, they'll lose the deal. The reality, clients who respect you will respect your terms. Those who don't will be late, difficult, and quick to blame you. You're not a financing company. You're not a credit department. You're a business owner trying to keep the lights on and grow. That requires cash flow, not promises. First, stop accepting Net-60 as the default. If a client asks for it, ask why. Is it their internal process, cash flow, or policy? Sometimes it's legitimate. A large corporation with layers of approvals might need more time. Often, it's just a habit that can be negotiated. Offer alternatives. Net-30 with a small early payment discount, an upfront deposit, milestone-based payments, or credit card payments that put the financing burden on them. You'll be surprised how often clients agree to better terms when you simply ask. Most of the time, they're not trying to squeeze you. They just didn't think you'd say no. Second, if you do agree to extended terms, charge for it. Build the cost of waiting into your pricing. If they want 60 days, they're paying a premium. If they want 30 days, they're paying standard rates. If they pay up front, they get a discount. This isn't punitive. It's fair. You're providing both the work and the financing, and both have value. Third, get comfortable walking away from bad deals. If a client insists on terms that put your cash flow at risk and won't budge, that's a red flag. It means they're only thinking about themselves, not a partnership but a liability. You need clients who value what you do and pay accordingly, not those who treat you like a credit line. Here's the bottom line. Cash flow is everything. It's the difference between growth and stagnation, confidence and stress, running a business and being run by it. Net-60 might be common, but that doesn't make it smart. Just because a client asks for it doesn't mean you have to say yes. You're not a bank. You're not a lender. You're a business owner, and your terms should reflect the value you bring and the reality of your expenses. Next time someone asks for Net-60, pause. Ask yourself, is this client worth financing? If the answer is no, don't be afraid to say it. Your cash flow will thank you.